Talk about another stock in focus, IRFC, up, I think, about 4% right now. We spoke to the management. Harsh caught up with Mr. Manoj Kumar Dubey. Hear out a slice of the conversation.
Into what IRFC is up to. There's a transformation which is at play at IRFC. You're going from a single client to a multi and sector-wide reach, which you are trying to do in terms of lending. So before I do that, give us some lens into Q1 FY26 before I go into the diversification which you are playing out at. On the existing business, what is the impact of the rate cut and how do margins evolve on the existing business for FY26?
As you mentioned, we came out with very good numbers, whether it is top line or the bottom line. In fact, our PAT has grew up in double digits on Q1 basis. Going forward, as you know, from March this calendar year, and precisely in this first quarter, we have shifted to the diversification model of lending. So overall, the quarter has been very heartening and encouraging for the fact that we are getting a lot of queries and a lot of businesses also. In fact, our order book is growing. And today we stand around 25,000 crore of the order book, which is all coming from clients in the railway ecosystem other than IR. As you mentioned about rate cut, yes, the sector is getting very competitive rates. In fact, IRFC having its very low overhead cost, we are competing with banks preferably for the good quality assets. And for the big ticket projects, of course, there are competition with our peers in the NBFC sector. Overall, as the country is growing with a lot of demands in the capex, we feel that the story is going to get positive every quarter. And I always mentioned that in the railway-centric sector, there is huge scope of investments, and IRFC is well placed to cater to all those needs.
Got it. Sir, what was the growth like for Q1 FY26? Because I didn't see your investor PPT, and therefore trying to understand what the growth is looking like. Second, for FY26 full year, what's the growth projection going to look like?
Yeah. So if you see my top line with the corresponding quarter as well as the trailing quarter, we have grown up of around 3%. While my bottom line has grown up in double digits, the reason I mentioned in my last con call also that we are now having the assets where the margins are better. If you look at my NIM, that is net interest margin, it has now grown up in cumulative more than 1.51%, which is up from 1.31%. So this net interest margin will keep growing because now we are going in high margin business, apart from the railways where I was getting only 40 BPS. So far as my top line is concerned, going forward every quarter we will be having more of top line and asset under management also. And I stand by my guidance that I gave in the beginning of the FY that we will be disbursing something around 30,000 crore this year. And my sanction of assets will be something around 60,000 crore. And we stick by that, and perhaps we are moving a little faster than what we had given the target.
Got your point. Sir, with regard to the rate cut, what is the impact on your margin number?
I just told you things have got really competitive.
Okay.
But for the fact that we are having the lowest overhead cost in the market compared to any of the NBFCs or any of the banks, so we are having a little comfort. But yes, the total rates being offered nowadays, even for a tenure of 10 years, have actually come down by 20 bips to 30 bips in the competition that I'm seeing, which is very good for the country as such. And that was the precise reason why Government of India has gone for the cut. So the benefit must be passed on to the customers, and we are also doing it, and others in the ecosystem are also doing the same.
Point taken. So large part of that cut will be passed on, and therefore no margin accretion for you as a result of this. So how should you look at OPEX? You're going into a model where you will require a larger workforce to assess the loans that you're giving out, the rate at which you are giving it out. What happens to OPEX? Because the one big factor that I saw in your numbers is your OPEX to assets or cost to income is the lowest in the NBFC industry?
You are very right, Hers, and that is our mainstay and that will remain in the focus. We are going to grow, but numbers will be very low compared to our peers, and we will remain a company which will be having the industry lowest OPEX. Going forward also, we don't see my OPEX growing from 0.1 to more than 0.15. So that's the target. While my assets will be growing with more of the net interest margin. So if you have a comparison going forward with my top line as well as my bottom line, my OPEX will be, for years to come, will remain the minimum. And that is perhaps something which is giving us a more legroom to grab as many good quality assets in the future also.
Okay, all right. Sir, give us some color around this change in clientele. What comfort do you have that your NPA ratios won't spike? Because all this time you're lending only to the Indian Railway, where there's no concern with regard to where NPAs is a challenge. Now, if you're lending to the private sector as well as other PSUs, that could well be a challenge, right?
So I'm just correcting you. Right now, we are not directly lending to any private sector. We are having whole of government approach. So as you see, Indian Railway is one of the parts of the whole government. So now we are funding to everybody in the government who is having any kind of backward or forward linked with Indian Railways. And to our comfort, there is hardly any government department or the industry who are not having any direct link with either backward or forward with the Indian Railways. So in a way, anything in the government who are doing business perhaps are going to have a link with the railways, and they are our clientele. Number two, private people will come in the picture only when they are entering into any kind of long-time concession agreement or some kind of joint venture with government, and those entities are as safe as anybody else. So the color that you wanted from me is the positive, in the sense that with the Indian Railways, we were bound to earn only 40 paisa or 35 bips on the project and the rolling stock. So that was the limit of our margins. Here, despite being very competitive for the best kind of projects that the government ecosystem is offering, we are here garnering more than 2x to even 3x also what I was earning from railways. So going forward, I'm emphasizing that our net interest margin will be showing every quarter a very healthy growth, which will be giving a very good bottom line for my investors, and that should be music to the ears.